Hello, guys. So I have another stock that I've been following for quite a while. It's called Synergy, and they're basically a consumer goods company. And as you can see by their stock price here, they are fairly distressed. And if we look at their more long-term trends, they've definitely been, they're definitely struggling. Um, they're under the 100, they're under the 200, they're under the 50, they're under the 20, they're under the 10, they're under their 5. They're just going down, down, down. And the reason behind this is several fold. First of which, this company was struggling for a couple years. They had a flagship product called Flat Tummy tea, which was a tea that was supposed to detox and help you get a smaller tummy. And of course, everyone liked that, so they were making good money. However, that let me see, that brand had some struggles, and what they've done recently is uh, basically de-inventory. So they used to be like about a $10 stock, whatever. Not great, not terrible, but they had a lot of products, and they have begun in the past 2 years to rebrand and de-inventory. And what that did is it basically slashed all their income. They got rid of all their old uh, products for the most part and began to focus on the what's the name of this thing? It's the Focus Factor. So they had a pill called Focus Factor, help with weight loss, and they're trying to transition that into a beverage. And if that process works, then they will become profitable again. They're technically profitable now, but they have net negative equity. And they have net negative equity because they had to basically dump all their old inventory, spend a bunch of money to rebrand and advertise this new product that they're working on. They secured about $30 million in financing to help them get this product out. And they actually used to sell stores at Costco and a few other places, so they definitely got distribution networks. But as of right now, even though they're in a sense profitable because their debt is so high, their debt is above the equity in their company. So they're basically priced for bankruptcy. Institutional investors are not allowed to buy it. They are definitely a risky play. Now, the good news is if this brand does well, and again, guaranteed, there's no guaranteed promise that this will actually work. And I personally may wait a little bit to buy them. But at this price, after waiting for such a long time, they've actually had positive earnings, but again, because their 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 debt is so high, even though they're in a sense making money, they're not making enough to compensate for their debt. If this branding and this new inventory does well, it looks like they could, in a sense, get rid of all their debt in the next 2 years. Whether they do it or not is up for debate, but they, in a sense, would be able to pay it off with the amount of income they make. Where was the. Uh, yeah, where's the thing? So, one of the reasons I was interested in them originally was because they have really good fundamentals. Um, High gross margin. Their net income is pretty low right now, but when they were operating well, they had pretty good income, pretty good EPS, and accelerating revenue. But I'm trying to remember where it was. Basically, they're looking at between once this beverage thing takes off, if it takes off, they're looking at increasing their income by about 25 million, which is basically the market cap of their company right now. It's more than that. So uh, not only would that allow them to pay down their debt, but if they became not distressed anymore and their net equity turns around to be not just a lot less, but even positive, that would open the door to, you know, institutional investors or adding this company to little funds to own. Again, I'm not saying that that will happen, but based on the price that it's at, I've been following it for quite some time, just waiting for things to develop, and I'm trying to decide where the my plan is, of course, I'm not telling anyone else what to do. Don't do what I'm doing, but my plan is to buy it at some point because I like to take a little bit of chances. And if this is really close to $1, you know, I'd be willing to risk $1,000 for 1,000 shares to potentially, in the next couple years, 2 to 3 years, go up to $10. That's not a huge play. That's not like, buying several $1 million worth of Amazon stock and this or that, but it's if that part of the portfolio does well, that would be nice. And if it ends up not doing anything for a year or two and I just dead money, it's not a lot of money to be tied up. And if it goes bankrupt and I lose 1,000, for me, I'm like, well, it's an acceptable risk. Now, if I compare that to Hydrite, which had a little bit of a recovery today before falling off the wagon again. Hydrite is actually, let me just look at that real quick. Hydrite has a market cap of 93 million right now. And Synergy has a market cap of 12 million. So much, much smaller than Hydrite. Hydrite is priced for well, I don't know if it's priced for this right now, but it is expected to make 150 million in revenue next year or this year. We're a quarter of the way through. They should be reporting in a month or two, and I bought more right around. Actually, I bought more on this day when I was watching it. That's my last purchase. My position on this is probably larger than it should be. It's not a position I would plan to hold for 10 years or whatnot, but I'm, if this goes tits up, then I'm definitely going to be hurting. But in comparison, yeah, very low debt, already profitable, nothing but accelerating revenue in every single avenue of their business, very low stock price, low price to earnings, about 10 price to earnings going forward. Their business should be doing nothing but grow over the next 2 to 3 years. So again, they're projecting 150 this year. That again, I don't want to throw out random numbers, but with historical growth for their company, even at just 20%, we're looking at hitting above 200 million in about a year after that. And I don't know. As far as the penny stocks go, this is obviously a lot safer. My position in them is already pretty flushed out, and and who knows? I like this company. Their margins are what is kind of getting to me. If their margins remain at 70% and grow a little bit, all the new business they're getting is just going to be very highly liquid cash, lots of free cash flow. And with more cash paying off their debt, this could be a $7 to $10 stock in a couple years, maybe two, maybe three. But if they not only do well with that, with the focus strength they're working on building, they could also add more things to their brand, invest in new products, revamp older brands. I don't know. I don't know what the future holds for the company, but they are definitely in survival mode right now. If they went bankrupt today and they had to take all their equity and pay out shareholders, we would all get $0. So very risky. I'm definitely not going to buy, 20,000 shares of this or 10,000. I'm thinking of watching it for another week or so with all this Iran stuff going on, just as the market sinks, and if they get close to $1, or $1.05, or whatever happens in the next few days, I don't know, I just nice little dips. So if they get close to based on my charts, they could continue to yeah, this right here, this downward trend on all the moving averages are going down pretty consistently. We had a nice pop up here and a nice pop up here. This, I think, was the news for the rebranding. And then they're like, oh, they're rebranding. Oh, they still don't have any money. But this does not look like it's going to recover anytime soon. But I would rather own it at $1 than at $1.20. So if it goes down a little bit more, I may just take a small nibble, a small position. We're talking like, a very small percentage of the portfolio, like a 0.5%, 1%, I don't know. But I like to buy round numbers of 1,000 or 100 shares, mainly for options, although I don't think Synergy has options. Let me check. They might, but I think they're probably... No, they don't have options. So if they may get options, and they may get an options market if it goes up, and then at that point I could sell some calls or just cash out of it. But it's a nice turnaround play. Definitely not a not a safe. This is not a safe thing to buy. This is not a safe. This is kind of a this is a pretty simple binary. This is either going to go bankrupt in the next year, or if they're successful, then they will double or triple in a year, and then double or triple from there. So it'll go from $1 to $3, and then $3 to $9 in about 2 years. Or it's going to be at zero. Those are the two options. And there's definitely a lot of other things I could get into that are safer, that have a lot more potential and partnerships. Like, I've been looking at this SLNH. It's made a little bit of money on that, but they've been heading downward. So this is a data center company. Definitely risky. Because even though a lot of the nicer data centers like IREN or Oracle, Applied Digital, Cipher, all this stuff, they're doing well. They got partnerships. A data center without a partnership, or they can't sell their data, they're basically worthless. So, but even SLNH, they've got that tailwind of a lot of places buying compute because they don't have enough. So once IREN and Nebius and all these other guys are tapped out, they might get some. But anyway, I want to do a little video comparing Synergy and Hydrite. Hydrite being my favorite penny stock. Comparing something that is ridiculously safe, very high accelerating revenue, very low debt, very low price to earnings, with a bright future, all the paperwork taken care of, compared to a company like Synergy, which is losing money hand over fist, more expenses and liabilities than equity, than assets, and basically is going to either have a successful launch or a failed launch, which will determine whether or not they stay in business or not. So, I don't know. Rules of investing, they say, there's some people that say don't put all your eggs in one basket, spread things around, have a nice balance, ETFs, different companies and blue chip stocks that don't move a lot, and then mix in some dangerous things. But other people say you have a choice between 100 stocks, or like buy the S&P 500 or buy NVIDIA in 5 years ago. Well, you should probably buy NVIDIA. So that's not that any of these are going to perform like that, but I don't know. I just like to look for opportunities. 'Cause- And I think the reason why I like these low stocks too is because all it just takes is, you buy 2,000 shares of Synergy at $1. They get a nice headline, a nice catalyst, something bumps them up to $2. You sell half your position, you're basically net neutral now. You made all your money back. You haven't made anything, you haven't lost anything, but you can let the other half of it ride and just see how it plays out. That's one of the reasons I like these little guys. Amazon is not going to double anytime soon. It might go up a little bit, it might go down a little bit, but they're not going to double anytime soon. My beautiful Palantir, you might double soon. But anyway, I guess this has been a lot longer than it should have been. I wanted to do a brief overview of Synergy. And there's a lot of other good stocks out there, but a lot of them get covered by other people, so I don't want to. And nobody watches this for the most part, so this is more for me, because if any of these things do well, particularly Hydrite, who knows? Maybe one of the financial influencers will call me up and be like, hey, you seem to have done well with some of these things. What's your strategy? And I'll be like, that's trademarked. I can't tell you. No, I'll tell them. I actually found this stock in a live stream that somebody was doing, over a year ago. Somebody just mentioned it in the chat, and I just write down whatever people do to just investigate it on my own. So that's how I found Hydrite and did my own research. And after a couple weeks, I was like, you know what? I like them. I'll buy them. And then their stock went up, and I bought more. And then their stock went up, and I bought more. And it's unfortunate. My average on them, I think, is like $2. So I'm actually finally below the value is below what my average price is. But I've got enough. I've got enough, and anyway, I'll stop babbling. You guys all have a great day, and if anyone buys Synergy or Hydrite, let me know in the comments. Talking to you, Mom. All right, bye-bye.